Global markets are facing a new source of pressure. The US dollar is strengthening, oil prices are rising, and investors are bracing for tighter financial conditions. In the last 24 hours, renewed concerns around inflation and interest rates shifted market expectations, triggering a defensive reaction across assets. The US dollar moved higher as investors priced in the possibility that interest rates may stay elevated for longer than previously expected. A stronger dollar tightens global financial conditions. It increases borrowing costs, pressures emerging markets, and reduces liquidity across the system. At the same time, oil prices pushed higher, adding another layer of inflation pressure, just as markets hoped price stability was improving. Rising energy prices feed directly into inflation expectations, complicating the path for central banks and limiting their ability to ease policy. Equity markets reacted cautiously. Investors reduced exposure to risk assets as the outlook for lower rates became less certain. Growth and technology stocks were among the most sensitive, as higher rates reduced the present value of future earnings. Cryptocurrencies also felt the impact. A stronger dollar and tighter liquidity environment weighed on Bitcoin and the broader crypto market. Once again, Bitcoin moved in correlation with risk assets, reinforcing its sensitivity to global liquidity conditions. Investors shifted toward defensive positioning, favoring cash and lower risk assets while reducing exposure to volatile markets. This environment reflects growing uncertainty around growth, inflation, and monetary policy direction. When markets cannot clearly price the path of rates, volatility tends to rise and risk appetite declines. In the short term, markets are likely to remain sensitive to inflation data, central bank messaging, and movements in the dollar. A clear slowdown in inflation or a shift in policy guidance could stabilize markets. But for now, caution dominates. This is not a single asset story. It's a macro-driven adjustment affecting stocks, cryptocurrencies, and commodities simultaneously. As long as the dollar remains strong and inflation risks persist, markets will struggle to regain confidence. For more macro-driven market analysis, subscribe to the channel and like the video.